Good afternoon. It's Tuesday, October 15th, 2024. Welcome to Chart Built Wealth. Profitable investing with technical analysis. I'm reviewing my current buy recommendations. The theme here is the potential for commodities to be the asset class of choice, such as they were in the 70s. They are underowned currently, and sentiment amongst the investment community is kind of middle of the road. So there's a lot more upside, I believe. However, oil is the elephant in the room of the asset class of commodities, and it has to break out. It's in a trading range. Until then, we will just buy based on our pattern breakouts. Just follow our discipline. So let's get into it. Crude oil in the commodity space, and again, the elephant of the group was purchased at 77.14 based on the daily charts. We had a rainbow convergence. The setup was great, suggesting a new high. But today's lower open, it opened down 5%, put a wrench into that. Our stop is at 70 right here. These are future charts and only update after the market closes. So right now we're just above 70, which is our stop. If we get a clear break, say 69 or less, I will be stopped out of this position again, and you will be the first to know. I added a small amount here today, but I added more to energy stocks because they have less volatility, and I will participate if crude oil is able to hold its stop here. So let's look at the bigger picture here on crude oil because it's so important. Here's the big descending triangle, resistance support. Where I bought and where our stop at 70 is, really we'll need to close above 65 on a Friday close, a weekly close, to turn me bearish on crude longer term. So we may see some fits and starts here. Marathon Oil down 3% today. As I put this together and 4% on the week, I added to it today. To give you an idea, my position is now slightly north of 1.5% of my portfolio. In crude oil and energy stocks, about 8% of my portfolio currently. I hope to get that up to 10% in the next few days if oil holds the 70 level. The upside here is potentially on Marathon Oil 41.50 or 60% higher. Our stop is 25. I added today. The Energy Spider ETF, symbol XLE, down over 2% as we speak today and close to 3% on the week. Buy recommendation was made on 10/7 at 91.07. Stop is down at 86. I've been buying this pretty aggressively today, about 2.5% of my portfolio. As oil goes, it seems like China goes. So the long-term chart of the Shanghai index, to look at the big picture and the monster 15-year potential symmetrical triangle. The potential upside is like 4,200. At 3,200 now, of course, we cannot buy this directly, so I've recommended FXI and Alibaba. We are focused on the past year or so around here since we got bullish, since the bottom back in 2023. Let's take a closer look. So China seems to trade with crude oil again, so I will cover China next. FXI, the iShares China Large Cap ETF purchased on March 20th of 2024 at 2403. Excuse me. The bullish inverse head and shoulders later gave us a $39 price projection with a great reward to risk. As prices spiked higher in September, every week I suggested partial selling into strength as we got extremely overbought. I suggested a correction was coming that would provide another buying opportunity, and we're getting it. So every day it is down, I buy a few shares more than I sold on the way up to get my position larger. Between FXI, BABA, I have probably 3% in China. Here's Alibaba, BABA. It's in the same situation as FXI. It got extremely overbought. Selling on the huge spike up in September has now allowed me to purchase more at lower prices. There is still a lot of potential upside with a price projection of 150. I added some today. Platinum, the Platinum ETF, PPLT, falls within our commodity theme. Platinum is underowned and sentiment is not anywhere near as bullish as on gold and silver, which have already moved. I like to buy things before the investment community latches on, a la China. When I initiated with a buy rating on October 1st, I suggested that platinum may be forming a right shoulder of a small 4-month bullish inverse head and shoulders pattern. Shoulder, head, shoulder. If prices get above 93, the small pattern suggests a $104 price projection, which doesn't sound like a ton of upside, but if we look at the big picture on platinum, this is a little inverse head and shoulders, but this is the much bigger, this is the big picture for platinum. A large 3-year symmetrical triangle. We had a bullish hammer last week. Our is at about 85. But if prices can get up to, let's say, 100, this pattern will become intact and suggest a $144 price projection or 60% higher. I was adding to the position today. It is currently 1% of my portfolio. I hope to get that to about 3%. Again, our commodity theme, but not gold, but the gold miners ETF, GDX. Gold miners, which carry the added risk of market risk. The correlation between gold and the market is low. Gold can go up while the market goes down, and etc. The correlation with the gold miners and the S&P 500 is more aligned to each other. So added risk. The big 4-year bullish inverse head and shoulders pattern broke out on April 25th at 34.33. That was the day of my recommendation. The price projection is 50. Everything is still intact. Excuse me. The negative here is the bearish divergence between price, as prices are hitting higher highs, and our RSI is hitting lower highs. So that shows us that demand is weakening. So it's just flashing a caution sign to be careful. So when this is up, I sell a little bit. When it's down, I buy those shares back. I'm not increasing my position at this point. The reward to risk is no longer that favorable. REITs outside the commodity sphere provide lower volatility, good dividends, bullish 2-year inverse head and shoulders pattern on IYR. That's the iShares US Real Estate ETF. And it had a small inverse head and shoulders pattern that I purchased before the bigger breakout of the bigger pattern. I bought it on July 5th at 87.52. The price projection on the larger pattern is 112. I have moved my stop up to 98. This was as much as 3% of my portfolio, now about 2.5%. Sold a small amount today on the big up day in a down market, which was nice. National Retail Properties, another REIT, Starbucks, national retail chains rent from them. Had over a 5% yield when I purchased it. Again, a multi-year bullish inverse head and shoulders pattern. Gave us a price projection of 52. Looks like we are starting to form a negative divergence between price and the RSI. I sold some shares this morning on the big up day, currently about 2% of my portfolio. Here's where the negative divergence is possibly forming. I think we still got farther to go here. Another REIT that I recommended, American Homes for Rent. AMH is a symbol. I purchased with the other REITs on 7.5 at 24.37, as it also broke out of a multi-year inverse head and shoulders. This one proceeded to go down, but did not exceed the downside stop. It gave me more time to accumulate and build a position. I was a seller on the up move yesterday. I was a seller on the up move, and have begun adding back. Price projection of 46 or 24% potential upside, currently 1% of my portfolio. Fixed income went bullish on May 20th at 91.12, way back here. The 20-year Treasury ETF, TLT in particular. The multi-year bullish inverse head and shoulders suggests 115. We recently had a pullback. I've been slow to add here because of the overhead resistance that I will share on another broadcast on the daily charts. I still holding 3% in TLT and quite a bit in fixed income. If you include short-term treasury bills paying 5% dividend with very little uh, share appreciation or depreciation, I hold about 50% in fixed income since July. However, I'm reducing that and looking to increase commodity and equity holdings for the next few months. Would like to see a pullback in equities to add aggressively, similar to what we just saw in commodities, which gave me a chance to add there. Please like and subscribe, turn on the notification bell. These are timely recommendations and you'll want to act as soon as I create a new video. Please like and subscribe. Thank you for watching Chart Built Wealth, Profitable Investing with Technical Analysis. Have a great trading day.